There is a silence before every storm, guys, and right now, Bitcoin appears to be holding its breath. Welcome back to another video, and welcome back to whatever this quiet, uncertain chapter of the market has become. I've been staring at these charts for days, feeling like a sailor watching a flat, glassy ocean, knowing that significant momentum often builds just beneath the surface. Because yes, price action has felt incredibly slow lately, but extended consolidation in crypto rarely stays passive forever. It is often the calm before major volatility resets the structure. Looking at the weeks ahead, there are strong structural signals that we could experience a sharp liquidity sweep to the downside before the next sustainable trend establishes itself. Before we dive into the chart analysis together, if you are new here, please take a second to hit that subscribe button. It genuinely means the world to me. And click that little bell too, so when the macro volatility resumes, you are standing right beside me with the data in front of you. Let's talk about what's really going on, because underneath this stillness, there is a technical story unfolding. Trading volume across major exchanges has declined significantly over recent weeks, sitting at a small fraction of what we saw during the early peak of the year. Interest has naturally cooled off during this consolidation phase, which often makes market participants vulnerable when sudden volatility enters. We also recently saw high-profile security discussions surface regarding hardware wallet vulnerabilities and key generation risks, reminding everyone that security in this space requires constant vigilance. Looking at the weekly chart, current price action mirrors historical patterns from previous market cycles. When analyzing key Fibonacci retracement zones, specifically the golden pocket areas, we see that Bitcoin has historically retested deep support levels before establishing long-term macro bottoms. Right now, price action remains suspended above those lower historical support zones in the mid to low 50,000s. History does not repeat itself identically, but it often echoes existing liquidity patterns. That technical setup suggests the possibility of one more corrective leg down to clear out leveraged positions before a broader structural recovery can take hold. I want to remain transparent about how I am navigating this market. Across my active trading positions in Bitcoin, Ethereum, and key commodities like gold, I have been maintaining a defensive stance, managing risk carefully as this consolidation plays out. Macro conditions have driven significant capital into traditional safe havens recently, with gold and silver seeing massive capital inflows amidst global financial uncertainty. My technical outline continues to monitor potential downside target zones in the low 50,000 to high 40,000 range for Bitcoin. In a broader market stress scenario, testing key macro moving averages closer to $40,000 remains a technical possibility worth preparing for, even if it represents an extreme outcome. We are now about halfway through this market breakdown, and if this analysis is helping you navigate the noise, please hit that like button right now. It genuinely helps this channel reach more people who need objective macro context. I would also love to hear your thoughts in the comments below. What is your primary support target for Bitcoin during this cycle? Are you accumulating, hedging, or staying on the sidelines? Let's discuss where the broader market is heading. Returning to the broader ecosystem news, security remains top of mind after researchers demonstrated theoretical exploit vectors against cold storage generation methods. Even when assets are kept completely offline, systemic risks around key generation and device firmware highlight that absolute security is a continuous process. Utilizing trusted, established hardware setups and maintaining multi-layered security remains essential for long-term capital preservation. Looking at the broader liquidation heat map, Bitcoin remains range-bound between key overhead resistance in the mid-60,000s and major liquidity clusters below in the upper 50,000s. Nothing breaks decisively until the market forces a resolution out of this range. We have seen similar multi-month consolidations during previous summer periods, and extended ranges of this nature historically resolve with aggressive directional expansion. Looking back at historical market cycles, late summer periods have frequently hosted volatility spikes and corrective percentage drawdowns before macro reversals take shape. While a deeper percentage drop remains a technical possibility, a measured pullback into key structural support near the $50,000 region represents a very common market behavior. When consensus leans heavily toward one specific outcome, the market often sweeps liquidity in unexpected ways before establishing its true direction. Thank you for sitting with me through this breakdown and evaluating these chart setups objectively. If today's analysis brought value to your strategy, make sure to check out our other deep dives on the channel. Hit that bell icon, stay disciplined with your risk management, and I will see you in the next video.